Welcome. In this video, we reveal the hidden GST tax traps that SMSF trustees often miss when investing in commercial property. Stay with us to protect your retirement savings and keep your fund fully compliant with ATO obligations.
You know, self-managed super funds, they're hugely popular, right? And for good reason. They put you in the driver's seat of your retirement. A lot of people love putting commercial property in their SMSF. But what if I told you there's a sneaky little trap hiding in that very strategy, one that could seriously mess with your financial future? So, you really have to ask yourself, is my SMSF property hiding a really costly tax trap? And here's the scary thing. For a lot of people listening right now, the answer is probably yes.
Okay, so let's get into it. This is the hidden property trap. The thing is, all that control and freedom you get with an SMSF, well, it comes with a big side of responsibility. And there's this one little thing, GST compliance, that so many people overlook, and it can put your entire nest egg in jeopardy.
It's actually kind of shocking how often this slips under the radar. So many trustees just don't know about their goods and services tax, or GST obligations, when it comes to commercial property. It's a huge piece of managing your fund, but let's be honest, it's not exactly straightforward. And that's exactly why people get tripped up. And look, don't just take my word for it. This isn't some theoretical problem. We've got a quote here from Tim Brown, an SMSF advisor, who says he sees this all the time. People just aren't aware they need to register their fund for GST. And by the time they figure it out, boom, they're hit with massive catch-up payments and penalties. I mean, that's the last thing you want to deal with when you're trying to secure your retirement. So why is this such a common mistake? Well, it all comes down to the big difference between commercial and residential property. This is a fundamental distinction you've got to know. Okay, let's break it down. When you think about residential property, like a house or an apartment, GST isn't really part of the conversation for rent or when you sell it. Simple enough? But switch over to commercial property and everything changes. Suddenly, GST applies to the rent you collect, and typically it applies when you sell it too. This right here, this is the tripwire. All right, so we get it. Commercial is different. But what are the actual rules we need to worry about? Let's dive into the critical GST rules and the numbers that really matter. This is the magic number, $75,000. That's the annual turnover threshold. If your SMSF's income, and that's not just rent, it's other stuff too, hits or goes over 75 grand in a year, you are legally required to register for GST. End of story, it's not optional. You have to track this.
But wait, it's not all doom and gloom. There's actually a pretty big benefit to being registered. Once you are, your fund can start claiming back the GST it pays on expenses. We're talking about things like maintenance, management fees, even some of the costs to buy the property in the first place. These are called input tax credits, and they can seriously add up, putting money back into your fund. Okay, so we've seen the upside, but what happens if you don't register when you're supposed to? This is where it gets really serious. Let's talk about the high cost of errors, because the consequences are no joke. Let's look at a real-world example. A trustee, Jane Williams, tells her story. They failed to register for GST. It wasn't until 2 years later that they got caught. And the bill? It wasn't just for the back payment of all that GST, but also a pile of interest charges on top. She says it significantly cut into the return on her investment. Think about that. Your hard-earned retirement savings taking a massive hit because of one oversight. And honestly, Jane got off relatively lightly. The ATO has a whole menu of potential penalties they can throw at you. You're looking at back paying the GST plus interest, for sure. But then there are administrative penalties. We're talking up to $12,600 per trustee. They can even take away your fund's tax concessions or, worst case scenario, disqualify you from being an SMSF trustee altogether. The stakes are incredibly high. Okay, that was the scary part. It's a serious risk, but it's also completely avoidable. So let's shift gears and talk about your path to compliance. I'm going to give you a clear checklist to make sure you stay on the right side of the rules. Here's your 4-step compliance plan. It's pretty straightforward. Number 1, track your turnover. You have to be constantly monitoring your fund's annual income. 2, engage professionals. Please do not try to be a hero and do this all yourself. Work with an accountant who knows SMSF GST rules inside and out. 3, implement systems. Use good accounting software to track GST and set up reminders for your BAS lodgements. And finally, number 4, keep good records. Hold on to everything related to property expenses. This is how you maximize those tax credits we talked about.
It's just like accounting professional Robert Chen says, you need to establish robust systems from the very beginning. It really is true that prevention is always, always cheaper than trying to clean up a mess later on. And just when you thought it was getting simple, there's more. The complexity doesn't just stop at rent. What if you want to make what's called an in-specie contribution? That's when you transfer an asset, like your office building, directly into your SMSF instead of cash. Yep, you guessed it, that has its own whole set of complicated GST rules. Listen to what business owner Mark Thompson had to say about this. He transferred his office into his SMSF and said it was way more complex than he ever imagined. He makes it clear that working with specialists was absolutely essential to structure it correctly and, more importantly, to avoid any unexpected, nasty tax bills. So let's tie this all together. Why does this all matter so much? Because when you manage GST properly, it stops being this hidden risk. It actually becomes a strategic opportunity to maximize your retirement wealth. You're not just dodging a trap, you're actively improving your fund's performance. All right, so there you have it. You know about the trap now. The curtain has been pulled back. So the real question is, are you positioned to turn this potential trap into a real opportunity? The choice is yours.